But listen in to that press conference, which is being addressed by top RBI officials after the announcement of the policy.
Swaminathan J, Dr. Poonam Gupta, and Sri Shirish Chandra Murmu. We also have with us today Executive Directors Dr. Ajit Ratnakar Joshi, Sri Sanjay Kumar Hansta, and Sri Indranil Bhattacharya. I also welcome my other colleagues from the Reserve Bank. Before we begin, we have a few housekeeping announcements. Sir, there are 24 participants from the media. I request the media participants to please stick to one question so that everyone gets a chance. I also request everyone to switch on the mic while speaking so that those watching the live telecast are able to hear clearly. And once you have finished speaking, please switch off the mic. Sir, with your permission, I will now call out the names.
Yes.
Thank you, sir. I will request Ms. Latha Venkatesh from CNBC TV 18 to please ask the first question. Over to you.
Thank you, Mr. Bridge, and thank you, Governor, for the opportunity. The worry is not so much with inflation and GDP, with the numbers in transition. The worry is with the way in which near-term call rate and repo rate have fallen. Call rate and TREPS rate have fallen way below the repo rate. I mean, they're almost a percentage point between 4.25 and 4.75 actually. So what's the thinking behind allowing that kind of a fall? On the 1st of February, the question we would have wanted to ask you is, how will you manage this large borrowing program? The market was rightly worried and yields shot up. So that question as well. The immediate short-term fall in call rate and TREPS rate, is it intentional? What is your view of how it may evolve? And separately, this medium term, how are you going to help it? Will it be OMO in liquids? What's the expectation?
So let me say, as mentioned in the monetary policy statement, liquidity is something that is our duty to provide. Ample liquidity, sufficient liquidity as is required to meet the productive needs of the economy. That is the first task. And the second task, to be able to ensure that monetary policy transmission happens, not only in the overnight markets, in the money markets, in the government security markets, the corporate, the credit markets, all the markets. So whatever we do with regard to liquidity is keeping this overarching goal in mind. Now, the tools that we have for liquidity, you are aware, we have a number of tools for them, especially, OMOs, long-term, short-term, VRRs, VRRs, so as to be able to ensure that we give liquidity and we keep the overnight liquidity at the policy repo rate. That is the immediate target, to keep it over there, and then hope that this will transmit into all other markets. The transmission, you are aware, has been quite good, especially, till December in all markets. After December, there was slight hardening, as I have mentioned. There was some hardening in the money markets, but overall, transmission has been excellent. We will continue, as I mentioned in my statement, that we will continue to provide liquidity proactively and preemptively. This is not something, that the exact details is not something that we always or by rule mention in the policy statement or only, in the policy statement. Liquidity is a continuous operations that is done. So you have seen that we have provided liquidity even outside the policy statement, as we did, in later when we felt that there was a requirement for liquidity in the second half of January. We followed it up with whatever we had announced in the monetary policy statement. We followed it up with liquidity. So all I can say is that we will continue to provide sufficient liquidity with an aim that the monetary policy transmission happens in all markets.
Sorry to intrude, but there is no mention of the word switches or buybacks by you or by the government. So the market is worried in the medium term. Right now it is a little stupid to ask about the liquidity is so plentiful now. But in the medium term, do these things still,
Are you referring to the government? See, the government program, I think, again, we have been looking at the gross numbers, which I don't think really, is the correct way to look at it, frankly. The way to look at it is, we have been looking at, 17 plus lakh crore or something. But there are, much more redemptions this year, coming year, next year, than, there were last year. So as a result of that, the gross calendar will obviously, be higher. But if you look at the net numbers, 11.53 lakh crore is the number for this year, government securities borrowing program. Next year, it is projected, it is budgeted to be 11.73 lakh crore. It's only 20,000 crore more, which is, one would have expected at least, if the budget size is going up by almost 9% or so, 8 to 9%. GDP is expected to grow at 10%. One would expect a 10% growth. The growth is much less. We should really be looking, at net. Number two, also, you find that this year or in the year to come, there will be money will be raised also through the treasury bills, which will help, in further. I think it will help, in managing the yield curve better. And we also find that the budgeted numbers for small savings are also, quite conservative. So I think, the kind of numbers, the borrowing program that the government is looking is much on the lower side, and they should be able to raise these kind of resources at very reasonable prices. I'll request Mr. Ravi Shankar, to further add onto the switches, some 2.5 lakh crore of switches have also been planned. That will also, further help on the liquidity and the management of the yield curves.
That's right. And buybacks are not factored in at this point in time. They are factored in during the course of the year. To the extent there will be buybacks, the gross borrowing number to that extent come down. I just wanted to, Governor explained all the factors clearly. I just wanted to draw the attention to the sense that the, gross borrowing is large. We should put them in context. Look at 2007-8. We were borrowing 1.9 lakh crores per year. 2 years later, 2.910, we were borrowing 5.8. 3 times the gross borrowing. Was that managed? That was managed. You look at relatively. Look at 2020, 2021. We were borrowing about 7 lakhs. In 2 years' time, we were borrowing 15 lakhs. Right? So these numbers, go up. If you compare to that, the increase is nothing significant at all. I'm certain Reserve Bank will be able to manage the government borrowing program quite efficiently. Thank you.
Thank you, sirs. We will take some more questions from our left side before we come to the right. Next, I'll ask Manojit Saha from Business Standard to ask his question. Manojit, please.
The trade rates have collapsed, which has created some pain for the non-banks. But at the same time, SDF, bank parking in SDF has gone up very significantly, over 3 lakhs. Is there a plan to tackle lazy banking? Is there a discussion on whether you can cap how much banks can borrow from SDF, or widening the corridor, bringing SDF down so that banks are forced to lend to productive resources? And consequently, do you think the CD ratio of more than 80%, 81% is a new normal now, given the constraints of deposits that we have seen?
See, we did review the liquidity management framework. your question is actually linked to, the liquidity management framework that was done recently, and not many changes were announced. Let's keep in mind that this is a complex subject, because these three markets, your TREPs, call money markets, and the repo market, there is very high linkage. We mentioned that when we decided not to change it. In the medium to long term, there is a very high correlation, and so that's why we continue to target the call money rate, which is called the Walker. Over short periods of time, on day-to-day basis, there can be fluctuations. There can be non-alignments. But on the whole, I think as of now, we are not looking at making any changes immediately. However, as you have also pointed out, there can certainly be different ways of looking at it, which we are at the moment, as I mentioned, we are not looking at whether to change the corridor and how to better manage it. As I mentioned, this is complex. We are right now not looking at making any further changes. There are to your second question on CD rate. See, this is cyclical. At a period when your credit is more than deposits, it's quite expected that the CD rates will go up. And when at times when credit is not growing so much, then the CD ratios will come down. And we have seen this happen over and over again. There is a time when the CD ratios go up, and then there's a time when the CD ratios come down, depending on where we are in the business cycle of the banks. But I may mention that for us, it's not the CD ratio which is important. What is important is liquidity. There is an LCR framework for it. There is an NSFR, net stability funding ratio, which is there for medium-term liquidity. There is an LCR for the immediate or the 1 month liquidity that we are looking at. Both of them for the banks as well as for the non-bank financial companies are at very comfortable levels. So there is no issue over there.
If I could just add one clarification. There was no mention of INR or BOP deficit in the policy. Is it because you are pretty much comfortable with the trade deals and the inflows and all? Is that the reason?
See, our macroeconomic fundamentals of the country, including the external sector, are very strong, very robust, very healthy. Whether you look at growth, inflation, whether you look at the current account on the external side, or you look at even the capital account side, I think near-term, medium-term outlook is very healthy, is very favorable. You are aware that the government has taken a series of measures to increase our external position. Number of bilateral as well as multilateral deals have been signed. EU, EFTA earlier, Oman earlier, UK, and now the prospective UK deal. All of these will help on the top of a very, very comfortable current account that was last year 0.6% of our GDP. First half only 0.8% of the GDP. On top of this, with all these deals, agreements, it should only further help. Not only on the current account, on the trade side, merchandise and services, but also on the investment side, because a lot of them have investment commitments. Like, for example, EFTA, I think, had $100 billion. New Zealand had $20 billion. On top of that, even on the investment side, the government has been very proactive. It has taken a number of measures. See, these are things, first of all, let's keep in mind, these are in the domain of the government. These are not, in our domain. These are in the domain of the government. The regulators are there primarily to facilitate whatever economic activity is going to happen, whether it is domestically or whether it is in the external sector. But I want to remind everyone that the government has been very proactive, both on current account as well as capital account. Latest example, on capital account being opening up of the insurance sector to 100% FDI. That will help. This year, we have witnessed record deals in the banking space and the NBFC space, about $15 billion, of announcements or FDI, already that has come in. And then a number of other measures that now the government is taking. I was very happy to see in the budget the tax holiday, for example, for data centers. That should bring in a lot of investments in our country. Safe harbor rules were in the works for some time. The safe harbor rules now for IT, I would like to draw attention to all of you and to your viewers. I think this has not perhaps gained, the attention that it deserves. It's a very big move towards tax certainty, simplicity, ease of doing business within our country. All these GCCs, that you see are being set up, they will vastly gain from. And these are only some of the measures, that I have mentioned to you. In the near term, in the medium term, we are, as mentioned even in the monetary policy statement, we are very confident of meeting our external sector responsibilities, whether it is on the current account. You're aware, 11 months, we mentioned 11 months of imports. That is imports. If you look at deficit, it is, my DG tells me, one should be looking at the deficits. Deficit is, if it is $10, $20 billion, let us say, so, we have sufficient reserves for many decades, not, 11 months of import, but many decades of deficit. Similarly, our short-term borrowings, debt, twice the reserves of our short-term borrowings, twice. So on the external side, we are very comfortable, and I did make a mention of that in my monetary policy statement. Thank you.
Yeah. Thank you, sir. I will request Ankur Mishra of ET Now to ask his question. Ankur, please.
Thank you, Bridget, and good afternoon, Governor. I want your attention towards the inflation growth dynamics. On one hand, when you're talking about growth, you have revised your guidance upwards, and you mentioned about the deals as well, which augurs well. But on the inflation front, you are inching over 4% in the next 2 quarters. But you have also given a caveat that precious metals is accounted for that. So in that scenario, last time when you mentioned the same thing, you used the word Goldilocks, the sweet spot scenario. Are we still in the sweet spot, or you think the situation is slightly different?
We are certainly, in the same sweet spot, maybe even better. Because growth is looking up, growth is looking even better, and inflation is the same. Headline, one is looking at headline, 0.1, 0.2%, 20 basis points here and there is a very small number, point number one. Point number two, it is headline. As mentioned in my statement, it is primarily to do with base effects. It is primarily to do with the volatility in the food prices, core inflation, underlying inflation, barring precious metals, is very benign, continues to be benign. So we are in the same position, more or less same position insofar as inflation is concerned. Growth seems to be better than earlier. So we are in a better position than we were, when we met last. over that, a number of developments have happened. You're all aware, as to the reasons as to why, we are in a better position now today than we were earlier.
Thank you, sir. I will now request Anup Roy of Bloomberg to ask his question. Anup, please.
Thank you, sir. Sir, Reserve Bank of India is selling US Treasury for some time now. In 2 years, the Treasury holding
Who told you this?
So the data shows that it is down 26%.
I don't know where you have got this data from.
US Treasury data.
No, certainly not. There is no such.
So the Treasury holding data there shows that it is now $174 billion, which is...
See, overall, you are aware that our forex reserves had come down. So as a result of that, overall, when they come down, then all holdings would come down, so they will change. So those are fluctuations on a day-to-day or a week-to-week basis that we give out. But there is no reduction in our holdings of the US treasuries.
So can I ask another question on the rupee? That so when the rupee was depreciating...
Let's keep in mind that there are, so many other people we are taking their time. So if your question is not asked by others, then we will come back to you.
Yeah.
Okay?
Thank you, sir. Next, I will request Hamsini Karthik from Money Control to ask a question. Hamsini, please.
Thank you. Good afternoon, Governor and everyone. My question is with respect to transmission of repo rates. It seems to be that bank lending transmission has happened much more effectively versus on deposits. I agree on deposits we've had transmission, but much of the transmission is at the lower end of deposits. The middle segment, which actually matters to the retail depositors, is continuing to remain high. And as an allied, we also saw CD of India's largest bank being raised at 6%. It does put a lot of cost pressure at a time when repo is being on a pause at this point in time or has reduced over the last 1 year. What are your thoughts around this? And I have a second question, slightly unrelated, but what caught my attention in your speech is your reference to precious metals this time around. We've also seen that gold loans as a segment has gone up by 86%. Much of it is coming due to the price volatility and not really the tonnage adding up to the growth in the segment. At RBI, are you a little concerned, or would you want to look at, how this does not have societal ramifications? Should there be higher auctions as gold prices correct?
So let me correct you that precious metals did find a mention, if I remember correctly, even in the last policy, not only this policy statement. But on the gold loans, we are very comfortable. There is no, we have been reviewing all the portfolios, whether it is gold loans, whether it is MSMEs, whether it is personal loans, all categories, they show good asset quality, low slippages, and no cause for any concern. The LTV ratios for the gold loans are quite low, although, we have a higher limit, going up to even 85%, 70 to 85%, depending on the amount of loan, but the LTV ratios being maintained by the banks as well as the NBFCs are on the lower side. As to policy transmission, your first question on deposit size, it is expected that, and that has been the case always, that on the deposits, the policy transmission happens slower because on the advances side, credit side, we have rates which are linked directly to external benchmarks like the repo and T-bills. So over there it is faster, and in the deposit rates it is slower. So that is to be expected. It has improved. It is improving. From every policy statement, we look at it even more closely. We give out the numbers to you, policy to policy statement wise, but they have been improving, and we are hopeful that they will further continue to improve.
Cost pressures will ease over time. Is that your estimation, sir, in that case?
over a period of time, certainly they will decrease.
Thank you, sir. We will now take a few questions from the right side. I'll request Sangeeta Mehta from the Economic Times to ask a question.
Thank you. Governor, could you elaborate on the policy? You have spoken about empowering customers, the mis-selling policy. You've spoken about a lot of things on mis-selling and the unauthorized compensation for unauthorized transaction. On those things, could you elaborate? And on this compensation, I also wanted to know whether if a person gives OTP, will he still be compensated?
I'm so happy to ask these questions. People have been, busy asking questions on markets. But obviously, there are many people in this room who ask questions directly related to customers. And every policy, and even outside, it has been our conscious effort that we continue to improve customer centricity, the customer experience, the customer delight that all of you, including us as customers, expect from banks, NBFCs, and the regulated entities. So, mis-selling, yes, this has been a concern. We have been mentioning it. There have been directions with regard to mis-selling. And this time, we have codified them. We'll be issuing the draft guidelines with regard to mis-selling. Similarly, there is a framework which we will now be taking out for compensation for small frauds, because we have observed that while in value they constitute a very small proportion, but in terms of numbers, I think 65% of them have less than 50,000 or so in terms of amount.
All right, so that was the Reserve Bank of India, top officials briefing the media. No additional takeaways from that press conference per se so far, other than the fact that the governor reiterated that the immediate target is just to keep the overnight rates at the repo rate and then hope that it transmits to other markets. And liquidity management, which is something that the markets were waiting to hear, the governor said, will happen on a case-to-case basis, as and when there is a requirement. And that's something that the Reserve Bank of India has been doing outside of the policy.